Well, profits plunged at Goldman Sachs during the second quarter. The Wall Street giant saw its investment banking revenue decline 20% from a year ago, and the impairment charges helped drag earnings down 58% to $1.2 billion for the quarter. So how does Goldman Sachs square up against some of the other big banks that we've seen this earnings season? Yahoo Finance's David Hollerith is here to weigh in. David, please take it away.
Jared, the call just finished up and CEO David Solomon said that, he pointed out that it's been a very tough quarter, but also did point to things to come that could be bright spots. Now, the bank has been telegraphing that it's trying to pivot its business. It's moving away from its one-time efforts to get into consumer lending and trying to focus more on its core business now. How it's stacked up this quarter to the other major banks, just if we're looking at more of the Wall Street type revenues, which is trading and investment banking in particular, Goldman has shown better than expected results in trading and worse than expected results in investment banking. That's compared to a year ago, the drops. Now, Morgan Stanley has shown the worst in trading so far, and Citigroup has had the highest loss or drop change from a year ago in investment banking. As far as Goldman goes, it also had nearly $1 billion in one-time impairment charges, or what the bank is trying to tell us has been a one-time impairment charge. And that was a focus on the call. Analyst Mike Mayo with Wells Fargo was asking about that. And really, I think the question there is whether or not GreenSky, this company, this consumer lender that they purchased back in 2021, will be sold. And it does sound like that is happening, and that this will be sort of the end of the markdown. There are also severance charges too. So Goldman obviously is moving away and is trying to grow its asset management and wealth management businesses, which Solomon had said will take years to grow. Morgan Stanley, obviously a close competitor, has been building its wealth management business for the past decade, and that obviously cushioned their revenues a lot, and it shows why they did not have quite the same amount of losses as Goldman has seen this quarter.
Yeah, really interesting to track Goldman versus Morgan Stanley, because both of them only became banks over the global financial crisis. But I want to move on to something else, David. As more smaller and mid-sized banks are reporting earnings, something to watch out for is higher capital requirements. Jamie Dimon has been talking about that. And Yahoo Finance's executive editor, Brian Sozzi, spoke with Bank of America chairman, Brian Moynihan, and CEO there, what he expects for this sector. And let's take a listen to that.
If you do this across the whole banking system, and that's why we're all awaiting these rules, but we hope that as the rules come out, they're balanced in terms of international competition. In other words, that right now, America and Europe appear to have the same rules, but they are advanced and we're in standardized. And if you listen, they're saying, well, we're going to go away from the models and all those things. That was the basis of Basel III, to get to advanced. So our advanced RWA are 1.4 trillion, our standardized are 1.6. So we have to use the higher under America's rules. That's not true in other locations. And so we have to be careful about keeping the balance and the competitiveness of the U.S. banking system, which is key not only to America, honestly, but it's key to the whole world, because the strength of our banking system actually helps the world prosper.
So interesting words there, David. Your thoughts?
Yeah, I mean, I think, just to put it simply, the amount of capital that banks have to hold, that obviously controls how much they can actually make use of their money, as opposed to holding it on hand in case of deposit changes. And I think that we're getting a lot of different regulatory results with the Fed stress tests that came out a few weeks ago, which sort of tested a different thing that was more for how banks held up during an economic recession. And what this is more so a change for banks over $100 billion in assets to meet the standards that the biggest banks have. And so that's going to change a lot of what they can do with their capital. And, we have to expect something like a long period for this rollout, as with the big bank regulations that have been set in place since I guess they were established in 2018 and are still being rolled out. But the big banks are ahead as far as that goes. And, we're looking at some banks in particular that are right on the cusp, like U.S. Bancorp. And, they are in a more difficult position to do it. But there is a strategy for how they can sort of optimize their capital in such a way that it doesn't so much reduce how much they can lend. But that is obviously the concern here.
Yeah, it seems to me a lot of these big bank CEOs not necessarily liking the new capital requirements, but we'll see how it shakes out. Thank you for that report, David Hollerith.